So do you disagree with the president that the CFTC should have full authority here over regulating predictions markets? You think it should be on the states?
Look, Sarah, I worked on the reform after the great financial crisis with Harry Reid, Senator and Majority Leader from Nevada, and nothing could be further from what we were working on then. Harry Reid, as Majority Leader, would not have had us preempt the states and move it to our talented but very small federal agency called the CFTC. So I just don't think that's what Congress did in 2010, and nor did any of the senators or House members that worked on it at the time discuss it, envision it, or otherwise.
Well, you know, innovation happens after financial legislation. So, you know, that was then. This is now. The CFTC says it's supported by historical recognition of events contracts, the role in regulating these markets. And so it should have complete jurisdiction, and it is going after things like insider trading.
It should go back to Congress and ask for it. But I'm saying that it is the law of the land what passed in 2010. And further, Congress gave the CFTC then authority to prohibit some bad things, agreements, contracts, or transactions involving terrorism, war, assassination, gaming, and other unlawful acts. And so there it was. Congress gave us that authority, and we used it in 2012. Unanimously, Republicans and Democrats agreeing together, passed something called Rule 4011. And that's the law of the land right now.
Would the states, do you think, would be better at regulating this than the CFTC?
Look, the Congress can sort that out if they want to change it. But I would say I don't think that the CFTC then in 2010 or now in 2026 has the experience, capacity. I mean, it's shrunk. It's a smaller agency now than it was 15 years ago, and the capital markets have grown significantly. And my gosh, it's going to be regulating sports contracts, gaming, betting contracts, and whether a particular basketball player gets a three-point play in the third quarter or not. I don't think that's its expertise. Its expertise is wonderful, but it's narrow and targeted towards the institutional public hedging risk in farm products and energy products and interest rate products.
Well, I don't want to get in a legal fight, but I guess what they're claiming is that these are the way they're classified as event contracts are as commodities, and they won an important legal fight a few years ago determining that.
Well, it's split, and this is going to end up in the Supreme Court, Sarah. What I can speak to is what were we trying to do in that financial crisis, and did any member of Congress on the House or Senate side say, "Hey, let's preempt the states here"? No, they just didn't. And I would note today, if I might, Tennessee, Ohio, Utah are three states run by Republicans that are also challenging and saying this is a state authority, not a federal
they want
preemption.
The revenues, don't they? They want the gambling revenues.
Sarah, listen, incentives matter. I'm an economist. Simon Johnson and I do this podcast called Power and Consequences. We actually did an episode on prediction markets, but it's always about some incentives, some power, some consequences. Yes, there's this back and forth about that at the federal level as well. But I can just speak to what we were doing then and what the law says. And yes, the CFTC, by unanimous vote in 2012, prohibited agreements, contracts, or transactions involving gaming, assassination, war, terrorism. These are all kind of things that in that context were thought to be, let's prohibit those. Congress gave us the authority.